Michael Bovee with Consumer Recovery Network, and I'm back to talk about an individual creditor and resolving a debt with them, as I often do on this channel. Rocket Loans, right? They're a marketplace lender, really kind of more of a lending platform. It's not really their money that they're ponying up and lending to people. It's usually banks that are behind that, kind of like an Upgrade or a Best Egg, right? Technology type of uses. And so some of the times when you're dealing with a creditor like this, there are limits to what they do to work with their debtors, you owing them, compared to, say, a brick and mortar bank. Typically, when you're dealing with one of these marketplace lenders, you are engaged in some kind of consolidation loan, like for the most part anyway. This won't be the case for everybody viewing this. I see people with Rocket Loans debt that's become unaffordable, and because they make loans so high, right, anywhere between a couple thousand and up to 45 or 50,000, it's usually because we've taken that loan out to consolidate other higher interest credit card debt, for example. And not only that, when I see people with Rocket Loans, I typically see them with multiple of these marketplace lender loans. And sometimes I'm helping people resolve something with Rocket Loans that it's straightforward and here's, A to B, a straight line to your solution. Other times, because you have some other moving parts with other creditors and you're looking for solutions, or maybe not looking to upset your relationship with other creditors. Sometimes you have to have more of a hybrid approach where you do a little bit of interest rate reduction over here with these creditors, and maybe Rocket Loans doesn't do that too advantageously for people like your credit card bank does, and so you have to think of something else to do with them. So we're going to cover all of that, okay? Before we even get started, just know that all of the concepts and the things that I'm going to be talking about, strategic ideas, they're things that you can talk with me about. It's a free consult, my initial consult with anybody. I don't charge for that. When you're dealing with Rocket Loans, it's a lot of these marketplace lenders, they don't work with you like your bank does, like, say, Citibank on a credit card, or even Discover on a personal loan, right? They have some policies that allow them to reduce your interest rate and make your monthly payment more affordable because, what was 19 or 29% interest, dropping it down to 0, 2, 4%, whatever. That makes your monthly cash flow maybe available enough to meet these demands and meet your payment with Rocket Loans or other creditors, for example. So if they're not good at that, and they're not, you can typically call Rocket Loans, and I highly, highly recommend you call any lender that you're about to fall late with or have barely fallen late with by a couple of days. It's amazing. You call somebody and you're not late yet, your payment's due in 3 days, and you say, hey, I'm not going to be able to make that payment. Is there anything we can do to work together? And it's kind of like, no, there's nothing in the system for you. Even if they want to offer something, they can't, because the screen doesn't display that available for your account. But suddenly, if you miss a payment by a day or 5, the things that they couldn't talk to you about when you were still considered current, suddenly now they can talk to you about. And often is the case with Rocket Loans and other marketplace lenders, they're limited in the amount of relief they'll give you from interest rate concessions. They might give you, COVID era type of 1 payment holiday, maybe 2 payment holiday. Not common, but it was during COVID. And so you're not considered late and you get the month off. And maybe because, you just had that one thing where you missed several shifts at work and your paycheck was light, the paycheck you use to pay these kind of debts. And that concession is all you need. You don't know unless you ask, right? So you call, you talk to them. If they're going to give you a prolonged, and in this case, not very, but still something of a monthly reduction in your payment, it's going to be probably a lower interest rate or something for a couple of months. And then you revert back to whatever interest rate that you're struggling with right now. And if that's all you need, again, just a temporary blip kind of support from Rocket Loans, call them, talk to them, tell them what's up. Again, don't be surprised if you have to be late a day or 2 before they'll enter into that dialogue with you. But if you've passed that point where, look, I've either not paid Rocket Loans for several months now, the damage is on my credit, I need a far more weighty solution, I need them to have far more concessions than 2 or 3 months of half off my interest or something, then you're really looking at 3 different intervention steps. And I talk about these on other videos. It's just a little bit less of an attractive option with Rocket Loans. First, let's talk about long-term debt management plans, rate reduction by working with the nonprofit credit counseling agency. These agencies, there's probably a few dozen around the country, most of them national firms at this point. And they work with your banks and lenders and reduce your interest rate through these concessions. Well, Rocket Loans doesn't really participate in these, right? So again, calling them yourselves and getting a couple of months of a rate reduction is probably better than what a nonprofit gets for you, at least at the time that I'm recording this video. That could have been said about some of the other marketplace lenders over the years, and some of them have relented or come up with creative ways to work with the nonprofit space to get you long-term monthly payment reduction for the life of the balance, right? Always worth a phone call. And then from a hybridized perspective, what if you are having trouble with Rocket Loans, can't get concessions, don't want to fall behind or your credit with 30, 60, 90-day late pays and whatnot? Talking to one of these nonprofit agencies will often provide some math for you to cogitate on, like, hey, I've got $25,000 worth of credit card debt. On average, I'm paying 22% interest. What if all of that was average 6% interest and suddenly in a 5-year repayment path to be done with all of your credit card debt? And that gives you a little bit more cushion in your monthly cash flow to then be able to afford Rocket Loans. Okay, well, yay for Rocket Loans, right? They get all of their interest back, but it's just the way these things work. You can come up with creative solutions. Now, I know what all of those banks do, all of your credit card banks and virtually all lenders, right? So we can have a discussion about how that hybridized approach might work for you. And it's actually worked for a lot of people. Then if you're going to do that, that's pretty set it and forget it. When you're on, some kind of auto payment through a debt management plan, as long as you make that money to give to them, you can always make it go faster, but you can't miss payments. And that's my biggest problem with those plans, is that they're great for somebody with predictable income and no shocks to your cash flow. But if you miss a payment, sometimes just one, and you'll lose the benefit of the plan, either from one or multiple of the creditors, thereby kind of breaking the whole thing, right? So its inflexibility is its biggest impediment, right? And you have to be able to afford it. So again, you're amortizing your monthly payments across all of your debt in full. Okay. So again, it's a math equation. And it's a phone call. And all of the nonprofits offer a no-cost initial consult. So please, call one. So second to that is I just jump right over debt settlement because that's a little more nuanced. And let's talk about bankruptcy. Well, because these types of loans from Rocket Loans, they, in my experience with the people I discuss these issues with, they tend to be larger loans, right? In excess of 10K. Anybody with more than 10K debt should really give some strong consideration to whether or not they can discharge their debt in a Chapter 7 bankruptcy. Most of us don't want to do bankruptcy. Totally understand. I don't want to do it either, but it has its place. And it's a super powerful, it is the heavyweight champion of debt relief, I like to refer to it as. Problem with it is you have to qualify. So first off, there's a state level income means test that you have to pass. It's based on your household formation, how many people, what state you're in, and 6 months of income, right? That's the calculation. It's based on 6 months, not your tax return from last year or anything like that. So finding out if you qualify is as quick as talking to a bankruptcy attorney in your city or county. And get boots on the ground intel. That's why I like you talking to somebody local, because they know see the trustees in your bankruptcy court where yours would be filed and know about the exemptions and the exceptions and everything for you and whether you're going to qualify. So if you qualify for Chapter 7 and you're going to wipe out 10K worth of debt plus, and the national average cost is around $2,000, why not, right? Well, you're thinking, ooh, crap for my credit, and I'm in credit purgatory for 10 years. That's not true. I've got other videos about that you're going to want to watch so that you understand, hell no. You can buy a home 2 years after bankruptcy, a car at 5% a year after bankruptcy. I mean, it's just not the death knell to your credit, and it gives you that fresh start. It has implications beyond the income qualifications and asset exemptions and things like that. Just know that nothing can compete with it for price, speed, efficacy. Okay. Chapter 13 is different. Now that really is where debt settlement It competes with Chapter 13 directly. Not Chapter 7, nothing can, right? But Chapter 13 is a forced repayment plan. It's called a wage earner's plan for a reason. You have to have steady income. And the court it's usually a 5-year plan. There are 3 years, but most of them go 5 because the court's job is to get as much money from you as they can to distribute to your creditors. And if you're going to do that over 5 years, take the stain of the bankruptcy, have your credit impaired for that entire 5 years and have to rebuild it afterwards, give debt settlement also some consideration. Okay. So you're talking to a bankruptcy attorney about Chapter 7. You find out you can't qualify. And they're like, hey, I got this handy dandy Chapter 13. Looks like it's going to work for you. Fine. Get all the information, but make a cross comparison of debt settlement because that's what these two things, those are the things people should consider. Now, let's talk about debt settlement. So Rocket Loans isn't necessarily who lent you the money, right? There are banks behind those loans. You talk about Web Bank and Colony Bank and FinWise and, a host of these banks that do this kind of lending through those platforms. And it's sometimes I look at that and I go, well, who's the money behind your loan? And it can help me understand more and predict with some accuracy what's going to happen with your account when you fall late enough to be able to negotiate. Why is this key? Because you're typically, at least from my experience, you're not necessarily negotiating with Rocket Loans because they're not really good at it. There are lenders out there that are not good at negotiating. In other words, it's kind of unobtainium, or at least at the most favorable discounts. So there are places that you let them farm it out to a third party. One of the best examples of that, at least career-wise for all these years, is American Express. They've never really been good at negotiations. There's maybe an inkling right now in 2025 that they might start to be a little bit better at direct to their consumer negotiations and settlements. But historically, hell no, not even close. So I would put them, and not just picking on Rocket Loans, like I said, there's many like that, or Amex. But it's okay. You let them place it with a third party. Okay. So when creditors of any flavor use different buckets for collection, they're typically limited to 3 buckets. And so which of these do Rocket Loans use? The 3 buckets are contingency collection agencies. These are just average collectors, call and write, try to collect. They're motivated to get paid a dime by getting you to pay a dime, right? So they're part of most people's debt settlement trajectory because they make deals nuts, right? It's actually real common. There are debt buyers, and then there are law firms. When I tell people that there are risks to certain creditors and settling with them, it's to give you an impression that you need money fast, right? Debt settlement isn't this like my peers in the debt settlement industry like to market debt settlement and sell debt settlement as this one size fits all. Hey, you can't pay your bills right now. How about we cut what you're paying in half and we'll get you out of debt in 4 or 5 years? That's just not conducive to success, right? I mean, historically, a lot of those plans fail because you're taking too long and creditors are not that patient. And I would put Rocket Loans in that category. So my goal for people with Rocket Loans debts is to take a look at their whole situation and look at, okay, well, these creditors behave this way, that one this way, and Rocket Loans, this is where you're going to fall in with your available cash flow to resolve a debt with them that has not been paid or is no longer going to be paid. And I'm trying to fit you into a fairly tight window, right? 2 to 3 years is generally the max that I want somebody's settlement plan to go. And one of the reasons you can go that far is you don't need a lump sum to settle debt. You can actually make settlements. Maybe you pay a little bit more than you would have if you did have that lump sum, because money talks and BS walks, right? Yeah, that maxim is very evident in debt collection. So having all the money to give them in one shot may not, but often does provide a better discount. If you need time is available, right? And so depending on who's got it in those 3 buckets, it's not abnormal to get 2 and sometimes more years to pay a really dynamic settlement, right? Let's say it's half off, right? And you get 24 months to pay. How does that fit within your current cash flow and capacity to follow through on something like that? How does that fit with some of your other bills and obligations? Now set that beside Chapter 13 bankruptcy that was 5 years, stay in bankruptcy, credit is going to bounce back way before that with this 2-year debt settlement trajectory. And you can see why debt settlement is good competition for a Chapter 13, but really poor competition for a Chapter 7 that only takes 3 months and $2,000, right? Now, when you take into consideration, you're watching this video and you've got Rocket loans and you're like, yeah, Michael, I wish my loan was 10K. It's 45, right? That benefit of bankruptcy Chapter 7 is even more stark. That duration matching of your cash flow over 24 months, if you can settle, or maybe 30 months, if you can settle, all that more important to make those calculations and compare all of your other debt. So there's moving targets, right? And it's typically a formula that I can build for people seriously in 15 minutes. Check it out. Fix a time on my calendar, the Calendly app, and I will call you at that time, plus or minus a minute. I'm usually punctual. We'll talk through all of these options once I know a little bit more about your situation. If you have questions, if there's something that you want more clarity on that I've covered today, and or you are already dealing with a collector on a Rocket Loans and maybe you just have a quick question, you don't need to schedule a call with me. Just post in the comments in the video below, and I answer those every day, usually in the morning with my coffee, and see you on the next video.